Good morning, everyone. Hope you all are doing good and safe at home. Stock market or equity market or share markets. Somebody say it is the market for your long-term investment. Somebody say it's the market for the gamblers. And somebody say it's the market to beat the inflations. So finally, it is the stock markets which give you a good time of returns when you think about the inflations. But people in our India has a lesser number percentage on investing in stock markets. So if you compare to the developed countries like US, the investment is 18% on the stock market, whereas in the India it's a 2% investment on the stock markets. Where if you compare the developing country like China, 10% invest on the stock market itself. So what is the reason that people are not investing in the stock markets? The first reason I just want to tell you about the lack of awareness. People are not aware about where to invest, what to invest, and which purpose they are want to invest. Thus, there is not any kind of course available in the markets, who to follow and where to follow. But right now the situation is there, you can things that you can learn through online, okay, and you can get the valuable of the stock markets. At the same time, when people are more risk, but they are not risk takers, okay. When you think about not risk taker, they want to invest in the fixed deposits, current deposits, fixed deposits, recurring deposits, and the other investment where you give it a fixed return or rate of return and which are more secure, rather than they are investing on the stock markets. So I just want to ask you one question, whether your returns on the fixed deposit can beat the inflations, can beat the mehengai we call in Hindi, can beat your expenses which are increasing day by day. So today on this video, I'm going to give you the exact thing of what exactly a stock market, what exactly how it is functions, how can you invest for your benefit of the stock markets. So if you want to take the benefit out of the stock market, definitely you want to watch the video till the end. So what do you understand about a stock market in coming in mind? Definitely in equity markets, okay? Definitely markets of the share markets, okay? For example, you and me, we both go to a partnership, okay? We want a startup. We're going for a startup and you want to 20,000 of investment, but I have only 10,000 and you have only 10,000. So we invested 50% of the shares of the company, 50% of the investment. So you are purchasing 50% of shares, I invested and I purchased the 50% of shares. So it means whatever the profit will be earned by the company or whatever the profit will be generated with the company will divide it 50-50. Whatever the loss will be earned by the company, that's called and what has to be between you and me, that's a 50-50. The same thing in case of stock market, I'm not going to you, I'm going to the entire public by giving the rest of percentage, okay, by giving the to purchase my share of the company. But here one thing always coming into the mind about a company, okay, when he's going to the public, definitely he wants that the public will purchase their shares so that he can invest some money, and invest some money, that money can be used for the company and company can generate business, and whatever the profit will come will be distributed. And how much distributed? Whatever the percentage of shares they are holding. Share means I told you about the number of the amount they have invested, the same thing about the shares, okay. So what exactly in return of the amount, what are the shares I will give in to the shareholder, that's called as shares itself, that's called as stock or shares which I am giving to the person or the person who are investing in the company, and that person is called the shareholder. Right now the question is how much percentage I can think about the share. So think about if your person is become investing into the shares of a company and investing money in the company, he become a shareholder. He became purchase some shares of a company, right? So if I give all the shares to him, he become an owner of the company. So definitely a promoter or somebody who wants to start the company definitely want to keep the maximum number of shares to himself, okay, maximum number of percentage of shares to himself, so that he is the owner, and apart from that he can make a decision making, or he can do a decision making power, and he has the decision making power. So whenever there are decisions, whenever there are meetings, definitely the owner has a decision power, and every shareholder has to adhere and rules and regulation of the decision of the owner itself. I think that everybody who are purchased, they are the owner, but decision making powers will be given to those who are purchased the more number of shares. For example, about SBI, the 56% of share in the hand of the government. Okay, so he has the decision making powers, but the rest of the percentage in the public itself. So they have the owner, but they are the owner only the certain extent. They don't have the decision making powers. So that's all about the called the shares of the company. So you have to remember the two things it is coming to your mind. What exactly is shares of the company? When a company is first time, when you and me are going with a partner, so when you are going doing your business, you own a 50%, I own a 50%. So that is called a private limited company. You limited only 50% of your shares. I limited on the 50% share. You are the owner, I am the owner of the business. Okay, we are the partnership. In case company make profit, we divide it between ourselves. But in case of loss, definitely that much a percentage, only whatever the extent you hold, only that percentage you have to be in the same case of a mean. Except that person, I do not take anything from you. Okay, your house, your buildings, whatever the things, whatever the person you have hold, that much percentage you have to bear the loss, and you have to earn the profit. So that is called the company always be separate from the owner, or the company is always a separate legal entity. Okay, so that is according to the Indian Company Act itself. So now the question is, how can a company go to the public, and how can a company go to the public to the investment or to issue the shares? As I already told you about, the company can go to the public through the stock market itself, through the different way. Okay, I can go to the public through first time. If you go to the public to the first time, that's called let's go through one of the market that's called a primary markets. Okay, primary market is the market where company buying and selling itself. A company is sell its shares itself. Okay, so how it sells its shares? When you sell its shares itself, you want to go through the first time offering, that's called in finance language called IPO, or initial public offering. Okay, under this shares he has to meet the new investors. The new investor or new person has to invest in the company and become a owner of the company, and the same time has to company whatever the company has earned from the profit, or what are the company do business, what are the profit earn, what are the loss has to be occur on this company has to be bear by its owner itself. Okay, owner and the person who has taken the larger number of shares itself. So but how much percentage, what is that extent itself, right? So now the question is, if I am going to you through the primary market, that's called an IPO, or initial public offering. Now the company is can determine the price of the shares in this case. Okay, so if you are thinking about the price of the company, may want that it can price goes up, it can goes down. Okay, it depends upon the demand and supply of the investor, demand supply of the people who are coming to buy the company shares, right? So in this case, if the number of people increases, the demand will increase. If the number decreases, the demand will decrease at the same time. But company has the liability, or company has the things that he can increase the share price on a larger extent, but there will always be a rule and regulations has to be company. But in the India itself, there is also a board which is to determine the rules and regulation, the Stock Exchange of India. Okay, which is none other than the SEBI, or Security Exchange Board of India. Okay, every country have their own Stock Exchange Board of India, or Stock Exchange Board in the same kind of India. Stock Exchange Board of India, that's called Security Exchange Board of India, that's called none other than the SEBI itself. Okay, so what exactly is Security Exchange Board of? They find the rules and regulations of the prices, how much prices has to be issued to the shares itself. So as per the rules and regulation, company what they do, they have some maximum prices, they have the minimum prices. On this basis of that, they have to choose, they have to give the gap to the investors. So the investor has to be determine the prices on the basis of that, and has to be given to the and take the shares from the company itself. So you understand how the prices determine. You understand there is a Security Exchange Board of India which regulate the prices, the norms which have to adhere by the company. Okay, if you do not adhere, definitely you are ruled out of the markets. That's called a primary market. Okay, now the second thing is, when you buy the shares, second time when you want to sell the shares to the something, okay, that's called, you can sell the shares in the secondary market itself. Okay, secondary market is none other than the your market, which is called definitely in India, it's a Bombay Stock Exchange, or national stock exchange. That's called a secondary stock market, where the purchase shares from the company has to be kept by the investor, and they can be buy and sell between the investor to investors. Okay, so that's called a secondary market. There is no interference of the company, only the investor to investor can buy and sell the shares. That's called a secondary market, and there is no price regulations, and it is in case it is depend upon the demand and supply of the shares itself. So now you have to determine how now the question is, what is the difference between primary market and secondary market? Primary market is the company has to issue the shares through the initial public offering, first time offering, or second time offering, which is called follow-on offering. But in the secondary market is the share and exchange between the investor to investor, which is none other than you call the Bombay Stock Exchange or National Stock Exchange. That's called a secondary market. Okay, so now the question always in your mind, how the price of the shares and market value of the share determined. Say company market value always be same, determined or defined upon the how much price he has to offer. Okay, for example, company offer the price in the there is 1 lakh shares, can offer price in 1 rupee per shares. So market value of the shares itself 1 lakh. Okay, and he can offer 2 lakh shares with 50 paise. Okay, that's also be 1 lakh itself market value. So the number of shares has to be determined by the company, but the market value always be the same for the company. Okay, the amount of the shares, or the market capital always be a shares of the company. That's the only thing. So you understand about the primary market, you understand about the secondary market. Now the question is in your mind that what can be the value, what can be the owner. Okay, I already told about the owner is a decision maker who has the largest number of percentages. So every time a person who is a promoter who start a business, they want to take all the percentage of the company itself, so that they can be a owner of the company. Correct? So now now the thing is how an investor can depend upon the shares, and how investors can invest the money into the markets. So they have to think about the up and downs of the stocks itself. So from the up and downs, I mean how the stocks goes on, how the stocks goes up, goes down itself. So there is two index has to be considered into the in every exchanges. In India, it's called Sensex and Nifty. Sensex, it is none other than the sensitive index, which determine itself the price of the particular stocks, or particular stocks, or price of the stock, which is almost, he has taken almost 30 stocks. Okay, on 30 stocks, whatever the goes and whatever goes down in the particular period of time, it determines the value of the stocks, and on the basis of that, the investor only know that the stock that how to invest in the stock, and where to which area and which of the stock is more profitable for me, and at the same time it's how it is benefited for me. That's called as Sensex or sensitive index. But at the same time, Sensex, otherwise called, which is sensitive index, and which is consider only the 30. Okay, so it is registered under the BSE, Bombay Stock Exchange, and the Bombay Stock Exchange, which consider 5,400 companies, whereas Sensex is the index to show the up and downs of the stocks of the different period of time, where the investor can be deposits and invest their money. And same time, Nifty 50 is a national first 50. Okay, so it is basically a 50 stock, which shows about the up and downs of the 50 stock exchange, 50 stocks or 50 companies from the different period of time of how you investor can invest in that particular stocks. And it is on the basically on the national stock exchange, which is 1700 companies are listed. Okay, so top 50 and top 30 is for the Sensex, top 50 is for the Nifty. So on the basis of that, you can invest your money. What are the companies are invested, what are the companies goes up and down, on the best of you are taking a decision and invest on that period of time, right? So now the question always arises in the mind, so what exactly a private limited company, what is about a public limited company? So definitely, if you think about a company, the name of the say and co, so SS and Co Private Limited, SS and Co Public Limited. So when you think about a private limited company, suppose you and me and Go, we are privately own some of the shares of the company, and some of the invest in the company and hold some shares of the company. At the same time, we earn some profit from the company, and we earn some losses company which is divided between the them on the percentage of shares, and that's called a private limited company. When a company is going to a public, in respect of you, I'm going to a public, entire public, and I'm going through a private market or private market itself, that's called a public limited company. It means it lists its shares in the stock exchange itself, and stock exchange I already told about, Bombay Stock Exchange and National Stock Exchange, and they determine the prices, the top stocks of the companies where investors can be, because so many companies are listed their stock exchanges. If I am an investor, I want to invest some money on the companies, then I have to determine the top 50 or top 30. If you have to determine top 30, then you have to go for Sensex, which is Bombay Stock Exchange, with the top 50, which is called a Nifty or National 50, which is known as the NAC, National Stock Exchanges. So you understand about what exactly a Nifty, what about a Bombay Stock Exchange, what about the NAC Stock Exchange, NAC National Stock Exchange, all like that. Okay, now there may be chance that I already told about a company can be do regulations or speculations, what kind of increase the value of the share prices, that's why the investor can invest in the money itself, and maybe given their the balance sheet or something about the business or financial what about the financial sheet of the company in a different way, but there is always a rule and regulation of the SEBI that he has to adhere from the company. If you ever see a recent example of Harshad Mehta scam, the Kiran Parekh scam or Harshad Mehta scam, or example of Satyam scam, these are the example of that. They just sow their business in such a way that the people are investing money, but finally they got catch by the catch at the end, and they are in the bars itself, behind the bars itself. Okay, now the thing is, due to that, the stock exchange adhere the rules and regulations of the company, and adheres stock exchange has implement some of the rules and regulation of the companies, so they have to adhere. So what are the rules and regulations they have to adhere by the company? That every company have two auditors to check the balance of the company, and every company has an accounting check and balances, and that's why the company can be listed, and every companies have 50 more shareholders, so that it is going to list into the stock exchange itself. So these are the things that has to be adhered by the company, and that has to be so that they can go for listing the shares. Unless until it has to adhere, definitely it will be ruled out from the stock exchange. And if your shares at the same time, if you are adhere to rules and your shares has not demand properly, the SEBI has all the regulations to rule out the company from the stock market itself. So that's all about, you can learn from the stock exchanges and how a company has to adhere the shares and company. Okay, and the thing now, the question always in your mind, how can I invest money on the stock exchange? So there is a different way you can invest money. Okay, one, you can trading, you can invest your money, and second thing is you can go to the mutual fund. I will make another videos. Okay, so but I give a short term about what exactly. So if there is some people who are trading day and night, and it's became a job for them, after that they're just investing money and day and night, and for a short period of time, that's called a trading itself. Investing money from you are investing your money, and for a long period of time, that's called an investing. Okay, and the trade is done for one day, that's called an intraday. For example, you purchase one share, again you sell, again you purchase, you sell, that's called intraday trading. On that particular period of time, that particular trading day, whatever you purchase, you sell, that's called an intraday trading. And it about like, if you are investing money for a longer period of time, that's called an investment. Now the question always in your mind, shall I purchase the shares of the stock exchange or not? Because it's kind of gambling. So, but I always tell that it is a gambling process when you do not know exactly how the company it is, how the company's performs, what are the company's financial positions, what are the companies about his balance sheet, what are the company about the financial position last couple of years, how the company is growing itself, and how the company has been financial report and history of the company, accounting informations. So definitely it will be a gambling for you, because you are doing something unknowingly. Okay, like you see in the street, people are there is some gambling or something like casino, where people are putting their money without knowing about what they're going to give a return. So that's called a gambling. But if you know everything, if you are learning something, you're investing, that's never be calling a gambling. If you think about a trader, they are the people who are work in this trading business for a long time. They work on behalf of the investor, they are trading itself. they are really trading, and they are putting day and night itself, because they have the much knowledge about the share markets. They are the putting the really effort on that, so they are not a gambling business. Okay, so that's called MS. So if you are thinking about gambling, it's never be gambling unless until you know other things about that, right? That's called about the share markets. Okay, so you know about the share market. So now the thing about a broker, you think about what about the broker. So if I'm a broker, I purchase the shares on behalf of you in the stock markets, and I call a broker. Okay, many people doesn't have knowledge, so they want to go through a brokers. For example, a mutual fund, they want to go through a mutual fund, and they want to they want to invest their money. So broker will give an idea about where to invest money, how to invest money, which purpose to invest money. So you can purchase this. So your person, you can just putting your money, so they will take a decision. They will ask you about, okay, why this is a valuable shares for you, so they are invested money. For that, they charge the brokerage fees. If you see the bank, number of bank, they charge the brokerage fee higher, but it is pretty less in case if you go for the applications. For example, there is an application called CAMP, okay, where you brokerage fees and nothing, okay, no less than other than that. So you can invest through a CAMP. So you can there are application, a lot of applications, so you do not charge any brokerage fee. You can go and invest there, and that's going to be higher returns. We can benefit for you for your bidding and inflations. So that is all about, I just want to discuss through this. So it is all about, I told about, you can go through different so you should have a 3 account basically necessary for your investment. Okay, so the 3 account always be a demand account, a trading account, and always be a bank account. So bank account is somewhere where you can where you can your money can come, or money can go from your bank. You should have a proper money so that you can invest. Trading account is there, we can trade your business, we can do trading for day-to-day basis or for a long-term time. And demand account, something about the shares, whatever the shares you have purchased, that's form in the electronic form or dematerialized form. Gone are the days when people have to go to the stock market and do the business over there. But now the question is, the internet is sensation and internet penetration, so that people can go through all these applications, all this online platform, so that they can invest through online without any kind of go for time efforts going to the stock markets and all that. So everything is online, so you can go through online and invest your money and take the benefit out of it. And now the important thing, always remember that what are the inputs you are taking to try to start investing into stock markets. I know this is the situation where you cannot go, but yes, you can invest in the stock market for a longer period of time, and this will be benefit for you. Okay, thank you so much for watching my video.